Kranthi Bathini joins us this morning to take us through all that is catching his attention in trade this morning. Kranthi, good morning. Negative knock-on effect coming from the US. India seems to be performing much better than Asia. What is keeping bulls still at least in some sort of a steady lane in India and not really running away and cashing out?
Yeah, Kartik, good morning to you. Yeah, market seems to be at a positive territory at this point of time. 26,200 is acting as a strong resistance zone for the market in the medium to short term. We need to see market decisively closing above 26,200 to confirm the up move. And as long as Nifty could able to hold on to the range of 25,850 range, market medium to short term direction is a positive direction. You explained very well in detail how the wild swings the Wall Street have witnessed. Look at the market cap swings the stocks like Nvidia witnessed overnight. So by and large, we are in a positive territory. The much awaited news of a trade deal between India and US can be the game changer, can bring some kind of a positive mood for the foreign portfolio investors. Last few days, foreign portfolio investors have been they have been cherry picking the stocks, been the net buyers in the recent past. That made the markets to sustain in the range of 26,000 level. But still, markets are waiting for some kind of a confirmation right now. They are in a wait and watch mode at this point of time. We had a decent earning season, and the recent news has been geopolitical news, has been in support of the Indian markets by and large. But much waited is everybody crossed their fingers to know the final print of the trade deal between India and US.
The all-elusive trade deal that we've been waiting for months. In fact, ever since Jan 20th, it's going to be almost a year, Kranthi, and there were expectations, in fact, as early as maybe the end of January, that India and US are going to go ahead and strike that trade deal by fall of 2025. And guess what? Fall of 2025 is almost over. But I don't want to delve any deeper into that India-US trade deal. Jab hoega, it'll happen whenever it has to happen. Markets, I think, are pricing that in already. I want to spend some time on this theory of the AI bubble with you this morning, Kranthi. Which side of the pendulum are you on? Do you think it is already in bubble territory, or do you think it's going to expand a lot more before it becomes a bubble worth bursting?
Just to Kartik explain in a better way, just to look at this AI scenario in a microscope. One thing is this time the formation of the valuations is just restricted to a few, like the Nvidia and certain other stocks, a bunch of a few stocks. But earlier in the 2000 or 1990, when the TMT bubble, technology, media, telecom bubble was there, lot of small size, small caps have been in that participation of that valuation bubble. So every time time is different, but this time the valuations are by and large in the mega magnificent seven and the stock like Nvidia. That's where the froth is building up. Really, just to look at the data, too much money has been chasing these theme. By and large, AI theme is going to stay. There is no doubt in this entire theme. But these are all disruptive business models. One can innovate the existing one with the new idea that can be possible. This entire theme. But coming to the fact right now, AI theme is going to stay. There is no doubt, absolutely. But the valuation is the discomfort in the medium to short term.
Kranthi, I also want to sort of, staying on the same theme right now of the AI bubble. I think there's also a lot of data missing from China because one doesn't really know under the hood what are the technologies that China is working on. One can safely assume that Nvidia chips not reaching China is something that that is likely to impact Chinese AI revolution. But one doesn't really know what competitors to Nvidia is China already building on its own. So perhaps this entire theory of the AI bubble is discounting the fact that we really don't know what is happening under the hood in China.
Absolutely, Kartik. That's where the key concern. That's where it gives the signs of worry for this entire episode of AI theme is concerned. But by and large, it's more about the disruptive technologies that has been incubating, and we have witnessed 3-4 months back, how China come up with the new kind of a technologies. Also, this going to be there. This disruptive technologies is going to be there. That's where the key concern. But in terms of the markets are concerned, too much money is chasing right now.
All right, so there seems to be too much money already going in. We don't know how much more money before people realize which direction eventually the AI story is heading to. Well, it seems at least indicators right now suggest that even if AI stays at the current level of innovation, there is a good chance that disruption is going to happen one way or another, and more people are going to start using AI, and hence those data centers and the demand for everything in the entire AI infrastructure. But let's come to the Indian story in the context of AI, and I want to specifically discuss this deal of TPG, Texas Pacific Group, which is infusing 18,000 crore rupees into TCS. So does it now seem that TCS and Indian IT stocks are likely to see some sort of an upside, given that they are looking at least the entire AI ecosystem, if not core products, at least the ecosystem surrounding AI a little more seriously now?
Yeah, definitely. Indian IT companies have been, last few quarters have been mulling in terms of what way they have to get into the AI focused themes are concerned. Of course, they do have some kind of a AI programming themes are still there, but just to focus to catch up with the global changes that's taking place with respect to AI is concerned. That's where the Indian IT companies have been mulling at this point of time. They have strong cash reserves. So what the missing is action. That's where that is getting into the theme at this point of time, Kartik.
All right. And let's talk about energy also. The fact that Reliance Industries has come on record to say that it has honored all its Russian contracts, is going to stop importing oil from Russia and exporting it, refining it in Jamnagar and exporting it to Europe. Where do you see this entire oil story pan out from here? And where do you see India's bets now on importing oil from beyond the OPEC region? And is that something which is likely to play out negatively for crude prices going ahead?
We need to closely observe, Karthik, how these geopolitical issues are going to pan out. One thing is the recent soft statements from the President Trump administration has given some kind of a comfort. So what level these are going to be, we need to have much more specific numbers going ahead, how things are going to pan out. And next month, President Putin is going to be in India. So how the entire things are going to pan out, these are the things markets are anticipating and waiting at this point of time. So by and large, the global crude prices have been soft at this point of time. So how these geopolitical issues, just to because of the pressure that came from from US, we could able to reduce some amount of imports, but exact numbers we need to wait and watch. Much more clarity is needed to just to come to some kind of a conclusion.
Bathini, equity strategist, Wealthmills Securities. Thank you so much for your time. Pleasure having you as always right
Thank
here
you.
on News 9.